Hey, good afternoon. Campbell McCrary again, Amvest Capital in New York City, Vice President. Welcome to the Amvest Capital Inc. live webinar with Arizona Gold Corp. Arizona trades on the TSX as ACG, Alpha Zebra Golf, and as KERMF on the OTCQB. That would be Kilo Echo Rio Mike Foxtrot. Hope you'll enjoy today's program. It'll also be available in replay mode. Do feel free to chat in your questions in the question pane of GoToWebinar, or simply email them in and we'll build them into our panel question session after the presentation by Giulio Bonifacio. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. We also have disclaimers, and this call is most certainly for informational purposes only. Making you presenter, Giulio. If you want to turn on your webcam. Giulio's CEO and director of Arizona Gold Corp, formerly named Kerr Mines. Giulio has over 30 years in senior executive positions in the mining industry and is the founder and was the CEO of Nevada Copper. He also has been instrumental in providing over $700 million of capital to projects of merit, while having led efforts at every stage of development, from exploration, production, permitting, and construction. He is a CPA with extensive experience in the capital markets, securities matters, project finance, and M&A. He held senior roles as well with Getty Resources, Total, and Vengold. Following the presentation again, we'll be asking questions, and we'd love to have your questions as well. So with that, you have the floor. Take your time, and I'll see you on the other side.
Great. Well, thank you very much, Campbell, and thanks for everyone attending. And I realize that some of you have attended in times past, but for the new folks that are on the line, I will provide a general overview, if you will, and then we can get to some questions and provide the appropriate answers. As Campbell's highlighted, we have just gone through a name change from Kerr Mines Inc. to Arizona Gold Corp, which is more reflective of who we are as a company, but also signifies a turning point. And for the benefit of some of you that were on the call last time, I made it very clear that we were looking at putting in a project funding package, and that's in fact what we did, and we announced that in November. So that takes us a long way towards achieving our overall objective, which is to move the project into production by the end of the year. In the backdrop as well, starting in on a drilling program, 10,000 meters. We're about 7,000 meters through, so you start to see a good flow of news going forward. But the real compelling opportunity is, here's a project that has been completely permitted. We've modified all the pre-existing permits to allow us to put in a whole or leach circuit and produce doré on site. So as you can see on the first slide, it's really a restart of a pre-existing operation, and that's again what creates a real opportunity here. It's not like we're spending $100 million to take the project forward. We've got more than enough infrastructure in place. In fact, a wealth of infrastructure that simply allows us to continue on. And the package that we just put in, and of course, for purposes of today's discussion, I will provide you with forward-looking information. But we've done a lot of work in the background to get us to this point, and you can start to see that there'll be a good level of news flow on a go-forward basis, both in terms of drilling and what that represents, but also that'll lead into what's more important, and it'll be an updated resource. The resource that we'll speak to, I'm limited in terms of what I can or cannot say, is outdated, but I will say that I'm very comfortable in saying that it has grown significantly based on last year's drilling and the drilling we're doing currently. And if anything, the project funding package from a very serious group, for a total of $18 million US, of which we've received 6 to date. We expect another $6 million US in February, by the end of February, and then another 6 by the end of April. They have done extensive due diligence, mining professionals, notable individuals, and if anything, it validates the numbers and the statements that I'm putting forth on today's call. As you can see, the share count is what it is. We've got warrants as well, mostly held with strong investors that have supported the company for a long time, and like all gold stocks, juniors, mid caps, and large caps, they've all kind of traded sideways and downwards in some instances. We've traded across, but we're now gaining a good shareholder base, and I fully do expect that with the news flow coming out, you'll start to see some increases over a period of time. At the end of the day, it's really about the value that you derive, and simply put, near-term production within a year, by the end of this year, growth on ounces in a gold market that is much improved and continuing to look very, very positive. And I fully expect gold to trade in this range and potentially higher. Of course, there's going to be some volatility, but that will sell itself out here in the coming weeks, in my opinion. Good, strong group of mining professionals, business professionals. Our external advisors, well, worth noting, Hard Rock Consulting has been with us for a long time. We've just engaged Hanlon Engineering on the detailed engineering EP side of the restart of the mill. And just want to turn back to this. It's really a restart of a 600 ton a day mill. We're initially now looking at 600 tons a day. Previously, the predecessor was operating at 350 tons. So that comes with opportunities and additional economies of scale in terms of the yearly annual production that we expect, which will be in the 40 to 50,000 ounce range. One can't argue with the location. We're not in a challenging location. We have nearby communities. Labor force is going to be available to us because of where we're located. Again, we're not in a third world location, and we don't have challenges in fly-in or any of that. We've got an area that's within Arizona, and we have had no challenges at all in terms of modifying the pre-existing permits, which in itself, I would test the audience. There's not many projects that have been permitted successfully or modified recently, and so this is definitely first and foremost. And it's really about taking those permits that we have and moving it to production in what is a very, very short timeline. Land package, can't understate it. 50 square kilometers. It's a big, big land package. It's got a lot of blue sky exploration potential. Of course, our focus is the existing deposit, the Copperstone Fault and Footwall Zone, but we will drill it further, and we think there's good blue sky opportunity above and beyond that. As you can see, here's the outline of the pit. So, and you can see it in the backdrop. It was in production in the late 80s, produced 500,000 ounces at close to 3 grams. So that in itself is a very positive sign relative to our ability to add more ounces, and we've done that over the course of the last number of years. A question that I do get a lot on is, well, what happened to the past company that held this project? And I think they did a credible job getting it to a certain point, but they didn't do enough work on the underground deposit. They didn't do enough delineation or development drilling. They didn't have the appropriate work controls in place. And so, under Kerr's direction, now called Arizona Gold, we've done a wealth of work to continue to de-risk it. And, again, I'll point to the fact that the mere fact that we're able to execute a project funding package with a streaming group speaks volumes. And it really does get back to the fact that their success will be our success, and this is a key asset for them. And so you'd fully expect them to do the work that's required to gain that comfort that what we say here in this presentation is something that they know that we can execute on, and they're very impressed with what we've done to date. Slide 6, you can look at it on your own accord, but it really speaks to a lot of the things that were happening in the background through 19 and 20. We don't get real value for that, but we will. We fully expect that to be the case. Last year was more of a rebuild year, get it ready for where we're at today, put in a drilling program, which we started, but more importantly, put in a project funding package that allows us to move it to production. And on the last webinar that was hosted by West, we clearly made mention of the fact that we thought we could do it before the end of the year. And what you'll find is if I say something, I'm very, very diligent about executing and delivering on what I say. So next up will be completion of the drilling program, drill results on an ongoing basis, and an updated resource in Q2, additional funding from our streaming group, and moving it forward appropriately with the engineering that's required to get us to production at the end of the year. In terms of the deposit, the outline that you can see represents the open pit that was mined out very profitably in a 3 gram open pit. In today's world is considered high grade, and in itself was, even at $300 gold, was very, very profitable. We're accessing the open extent, the depth of the existing fault, both the footwall zone and the Copperstone zone. There's open extent at depth. We've got over 1,500 meters along strike. 150 meters down is where the open pit operated, 500,000 ounces, based on the previously published number, which goes back a number of years, 2018, 400,000 ounces. We know that number has improved, and that's the point. You will see improvements on that as we progress forward. But what we wanted to do very clearly is complete the drilling program this year and then update the resource rather than do it prematurely. But when I'll point to last year's drilling results, you see that they were extremely positive on all fronts. Another visual in terms of the published numbers, again, Inferred M&I gets you to about 420,000 ounces, as you can see. And then within that, 175,000 ounces of proven probable that represents about a 4.5-year mine life. Clearly, the project funding package that we put in place demonstrates that the group realizes that we're more close to 6 to 7 years and have nothing but opportunity to continue to add to mine life. And that's how they benefit. Their partners, if you will, they take a modest percentage of the gold production in the early years, and then that steps down to a lower percentage as we continue to have success with the overall project. Last year's drilling program, predominantly in this area, and within that, we have over 4,300 meters of underground development. So if you add it all up, over 100 million US spent on this project. We've got ample tax pools, but we've got the benefit of the infrastructure. And so it's not a new build. It's, again, it's a restart. And along strike, that's going to be a very interesting area for us to continue to test. And some of the drilling we're doing currently is from the base of the pit to grow it. Now we're finally turning to the underground drilling. So you start to see that. You won't see that in the next press release. You'll see it in the subsequent press release, but we want to go back in and test what we came back with last year, and it was very, very high grade. When I say last year, the latter part of 2019. I want to jump ahead to slide 9 briefly that touches on the published number. Again, this is going to change, and I say that with a level of confidence, and I want to give you some of the background as to why I say that. When the resource was calculated, it was done at 1250 gold. Cutoff grade is going to work in our favor, so that's going to change. So clearly, even by default, if we did nothing, we would have grown the overall resource. But the drilling we did in 19 points to why there will be additional lifts and bumps above and beyond that. But the method in which the reserve was calculated, very conservative. The capping really gets back to anytime you calculate a resource and reserve, you don't take it at the top end of that threshold. And if you're drilling, 40 grams over interval, you're not going to take the 40 grams. You're going to cap that at a lower value. So as you start mining it, as you start defining the mineralized domains more closely, you'll find that by default you will simply add more to it. But the drilling that we're doing currently is really where the upside will occur, in addition to the method in which we calculated and as well the cutoff grade and gold price that we use. We will not use $1,800 gold, but we will likely, as many companies have been recently, closer to $1,500 gold in that range. And so that in itself will always prove conservative, because once you start mining it, even though in your model it's showing as waste, at $1,800 gold, it likely isn't waste. And so as you're mining it and paying for that waste ore is actually pay grade ore. So let us not forget that either. The mining, at a gold price does justify you revising and adjusting your mine plan accordingly to pick up all the mineable pay grade ore. The next slide really just gives you a sense of the program, if you will, well underway, 7,000 meters. We did have some delays on it. We swapped in a new drill contractor in the latter part of November, and that's really changed it for us. And if anything, I get this question a lot, why haven't we put out drill results? Well, there has been a bit of a delay at the labs, but as I noted, we've drilled 7,000 meters at 10. Once the news starts to flow, it will be a continual flow of news periodically until we ultimately update the resource, and that's expected to take place in Q2. Other areas, multi-million ounce potential. Again, why does he say this? Well, I've got good familiarity with this project from way back. I was part of the predecessor company. I stepped away from it because I was busy with Nevada Copper. That was a 13-year endeavor, and I retired from it in the beginning part of 2018. Everything I said that was going to take place on that company and project has occurred. Grew it to 10 billion plus pounds, permitted it, sunk a production size shaft, and then there was a big group that came in over a period of time and acquired plus 50%. And when I was there, we had about 90 million shares outstanding. Now they've got closer to 1.6 billion. But the value add on that project speaks for itself. I've always felt that there was that real value there, and I've demonstrated that over that 13-year period. That was in part why I stepped away from American Bonanza, the predecessor company, but also don't think that the strategy was really in place the way it needed to be. You don't go into mining unless you've done the work. You don't do that until you've de-risked it. And if you're going to mine underground, make sure you have all the right people, and we do currently, to ensure that you minimize dilution, and that's by way of additional delineation, development drilling, but also appropriate ore controls that need to be put in place. And that's been part of the effort. Martin Kosiak was here when I joined Kerr. I joined in the middle part of 19, and we worked very, very well together, but very, very notable individual, very credible in terms of his understanding, and has done a fantastic job de-risking this project the way you need to on any project. But a methodical, systematic approach is key. It is always key on any build, and any restart. When you look at some of the other targets, plenty outside of the Copperstone zone, footwall zone, this is where we're drilling. We're having good success, good open extent at depth, good extent along strike, but there are other areas. This is a detachment fault system. It will run parallel systems alongside of it. There has been some historic drilling that I'm familiar with outside of the Copperstone fault zone, in the footwall zone. They came in with some fantastic values. I'm not suggesting that we'll target those currently, but we plan to this year at some point appropriately. But we have more than enough on our plate with the current program and, you know, the primary focus, which is about generating cash flow and being a self-sustaining operation to allow us to grow even further. Some of the drill results in 19. I mean, all I can say is very rarely do you see these type of intervals. And I just want to point to a couple of them because they're fantastic. And that's why, you know, with the method in which we update the resource, the drilling from 2019, the drilling this year started in 2020 and wrapping up in Q1 of this year, simply points to why we'll be able to speak to a resource endowment that is bigger than what we currently show, which is 400,000 ounces. But if you look at a couple of the drill holes, and it's worth pointing to, frankly, at 17, close to 17 meters of 40 grams, and within that 98 grams. That's something that you typically see, but clearly in the resource itself, you're not going to take it those values. You're going to cap it accordingly within the model constraints, and that's, you know, something to highlight. But as you start mining it, of course, there's going to be opportunities, and, you know, from a grade reconciliation standpoint, you will have some gains on that. But looking at where that drilling took place, 1821, 1820. Now, I don't want to spend too much time on this because we're adding inferred ounces. You can't convert inferred into M&I, which then ultimately becomes proven and probable until you do the delineation, development drilling, and tightly spaced drilling. But when you look at the defined mineralized domains, which were conservatively put in place when the model was initially created, you can see we've stepped up beyond that. And, you know, we're hitting some fantastic values. And specifically, again, I do need to point to it, 16.8 meters at 40 grams and nearby 10.7 meters at 17 grams. We will go back in and drill this with a core rig. This drilling was done with an RC rig. So if anything, it likely understates the interval and doesn't give you a true reflection. I'm a firm believer that on an underground drilling program, the core rig is the way to go, and that's what we brought in. We have 2 underground drill rigs, and so there'll be a continuation of the expansion program that moves into delineation development drilling. That is part of the mining process and part of the project funding package. That's to tightly define it so that we can define appropriately the mining stopes and working phases that are required to achieve our throughput, which will run at, as I noted earlier, 600 tons a day. Infrastructure. Again, not many projects like this are available. A wealth of money spent on it, which, you know, equates to significant tax pools. I'm going to turn to the economics, but the economics on a pre-tax basis in the early years will be identical to what it will be on an after-tax basis. Those tax pools will benefit from, not to mention the $25 million that we plan to spend to take this into production. Now let's look at what we've done. We've optimized it since I've been here. We've moved it from a feasibility study to something that's far more advanced, validated by the group that stepped in. Of course, they don't need to look at a feasibility study. They'll take the pre-existing work and they will update it accordingly. And the 2 major cost centers on the capital will be the mine development. So that's relatively easy to work through. We're now in the midst of putting this out to bid. We've got 3 contractors. We expect to get all those bids by the end of the month. And from that, we'll have a relatively firm price on what that's going to cost us, both the initial development and the ongoing development that's required to continue to mine out. And then on the process side, engaged Hanlon Engineering, very strong group. They're doing some work at Pinto Valley, but a practical approach. And so we have made the decision to go to whole ore leach because gold prices are trading where it's at. And the reason is, with whole ore leach, we move away from shipping at a float concentrate, which is what the predecessor company did. It was a failed approach, frankly, because it comes with a lot of other challenges. But, you know, it's always easy to look back at these things. But when we look at the recovery with whole ore leach, we're encroaching 96, 97, 98%. So well worth our while because we clearly will recover additional gold, which will simply improve the overall economics. Before I turn from this slide, you can see that this is one of the portals, but we've got 4,300 meters of underground development. You know, that doesn't come at no cost, and it's fully equipped and we have full power. We dewater the underground development. We have a modest workforce, now predominantly focused on the drilling, but that's going to change over a period of time. I want to go to the economics, and then a couple points I want to highlight. We obviously we use this model for purposes of the 18 million US project funding package. So all I can say is, to a certain extent, it's validated and you should take comfort in that. But I do want to point to the cautionary note. We will update the 43-101 appropriately this year, but a bit of a moot point on that, and that we're moving to production. So at what point in time do we do that? I mean, if anything, it's for the market, but the reality is when we look at the numbers, it's 23 million. We think it's probably closer to 25. That number will change slightly, but it's well advanced. Our operating cost all in, not just op cost, but all in sustaining cost comes in $1,100. So, you know, margins are pretty fantastic, without a doubt. And every year of mine life that we add adds anywhere from $25 to $30 million, depending on what gold price you use. But, you know, anytime you can see a project that generates an internal rate of return of close to 90%, I mean, that's pretty staggering, the payback. And what this does for us is, you know, as we have success and we start mining it out, we generate cash flow. We don't have to come back to market to dilute further. And so when you look at the valuation today, I think we're in the $50 million Canadian range. That's ludicrous compared to the comp group that we're in. Because if you look at ounces, we'll demonstrate that there's upside on that with the drilling in 19 and the drilling we're currently doing and the updated resource. Secondly, we'll demonstrate that we can generate cash flow and be self-sustaining as we continue to have success with drilling, all funded internally. We get to a point where we're a producer and our valuation changes dramatically. So I would opine that, you know, at 50,000 ounces, 45 to 50,000 ounces, that's pretty significant. We factored in an 8-year mine life, and I can't help myself to point to the fact that as long as you appreciate the feasibility says 4.5 years and understand that we just got a project funding group to come in and do extensive due diligence, that should tell you that we're close to 8 years. I mean, they've given us full value for that and more. And the geology on this is something that they spend a lot of time on, as well as the resource. They also look at the blue sky potential above and beyond the Copperstone and footwall zone. And so that will also in all likelihood demonstrate further adds on the ounces. And so when I look at, and why some people have asked me, did you step in? Familiarity with the asset, did try my hand at retirement, but more importantly, always thought that there was a really good opportunity, and I've demonstrated that by my own personal checkbook. I've written about $1 million on this. I have a big share position. I'm not the biggest shareholder, but I own about 7 million shares. Happy to own it. I find it interesting to a certain extent that we're trading at this level, but I also know that value across the board and what we put out in the coming months and weeks will show you why it's a great buying opportunity without doubt. And I think when you look at the volume, you look at the buyers, I think many of them are very, very pleased by that. Now, do you have some old shareholders that may be taking the opportunity to sell, that maybe might be uneasy with what the gold markets are currently doing? I really don't know, but I think if anything, the value from an NPV perspective, the value in terms of what we can add in terms of ounces with the drilling program speaks for itself. And the fact that we're not 10 years away from production, we don't need permits, you know, is invaluable, and that should never be lost. And that's why, very frankly, a lot of people have stepped in, and why I personally stepped in. When we move to project timeline, when are we going to get into production? The predecessor group had some aggressive timelines. I've always been a realist. I looked at the fact that the pre-feasibility study needed to be optimized further when I stepped in. I also looked at the funding package. There was a pre-existing funding package that wasn't as well advanced. And I always made it very clear that until we put in a proper funding package, you can't really point to targeted production. We feel very comfortable that we can get in production by the end of the year. We will have to do some equity at some point, but not significant and not immediate, because there's just a bunch of things that are happening from now until, let's say, June or July to get us to a point where I think the market's going to look at this in a completely different way. The fact that well advanced and detailed engineering planning, brought on Helen Engineering, advancing the discussions with the mine contractors to get a real handle on the underground development. There's no surprises that we expect within that, because, you know, even our numbers from an optimized perspective reflected more updated quotes. Met testing, it's just prudent to do that, but, you know, the recoveries and the justification to go to hole really point to why, you know, we'll incur additional capital to put that circuit in place, but without a doubt, well worth it. Plant refurbishment, whole ore construction, that gets us into production by the end of the year. Pre-production development, and then obviously you're not going to hit commercial production until the beginning of 2022, but you're going to start production in 2021. And when you look back at these numbers, I think it speaks volumes, the amount of cash flow that we can generate, you know, depending on the on the gold price, but I'm going to say 20 to 30 million 20 at the sort of $1,500 range, but as we see an increase in gold price, that potentially changes this number. But at $1,800 gold, it works out to be about 30 million bucks a year. Now, I want to be very clear that if we know we're close to a 7 or 8 year mine life, we really don't have to do much more drilling from surface, nor do we want to, because that's costly. What you really want to do is go back to areas such as this, where we've picked up inferred ounces, and do the delineation development drilling to prove it up appropriately. So, but you only do that with the underground development. So when you look at the configuration of the deposit, there's the A, B, C, and D zone. Most of the underground development, I'm going to jump back here, sorry, but it's worth pointing to. Most of all the underground developments in the D zone. We need to develop into these areas. We're currently drilling in these areas, and we'll put out some drill results that point to why there's additional mineralization in those areas that will support, again, what we think will be a much improved resource. Now, closing off on what we've done and the timeline we've touched on, these are kind of the areas that we think we need to focus in on for purposes of identifying shareholder returns. And again, when you look at our share registry, directors, officers, we represent about 35% of the ownership. So that is also why we did the streaming transaction rather than issue shares at 14 cents. Very sensitive type dilution. What makes sense for all shareholders makes sense for us collectively as a group, because we, to use a term, have more than enough skin in the game, inclusive of the chairman and the vice chairman who have been with this company for, gosh, close to 7 or 8 years. And they completely appreciate that this is the opportunity in what is a driving gold market as well, but production and creating an operation that can, in simple terms, wash its own face and generate cash flow. There's very, very few companies that can actually even point to that realistically within a short period of time. Now, all these things point to further validation and value add results, you know, from the drilling program, obviously received all our permits and the modifications. And that allowed us, again, to get to a doré, apply cyanide, put in a whole ore heap circuit, but it also allowed us to increase our daily throughput from 350 tons to 600 tons. Now we can add further to that. The plant itself has capacity to about 1,100 tons. We're not going to worry about that until we're in production. But if we add ounces, then we'll look very quickly at how do we increase the daily throughput rate, because if that occurs, then we can then potentially look at doubling up the annual production from 40 to 50,000 ounces to close to 80 to 90,000 ounces, depending on where you are in the mine life. Project funding, I was very clear about that on that last call I would get it done, and you know, in fact, I beat my own personal timeline, and we closed out in November. And yeah, that was months in the making, I will say, and there's a lot of groups that showed a lot of interest, inclusive of Sprott. We just thought this was a better package for us, and that's why we moved forward on it. And so from a processing gold production standpoint, plant commissioning and startup, we started the process. We brought in Hanlon Engineering to help us with that on the detailed engineering side. For us as a smaller company, bringing in a group like that, very important, but very comfortable with their skill set and ability. Mine contractor, it is not rocket science. It's a costing exercise, and it's really look at the existing underground development, 4,300 meters, understand the geotech competency of the rock, and come back with the appropriate bidding that allows us to, you know, advance the underground development so that we can create the development that we need to mine out over the next 8 years. And then start in on what will be an exciting period. Create a self-funding company that's got upside on ounces, that also has the ability to add further blue sky potential. And that's in areas outside of the existing resource. And I want to be very, very clear about that. You know, unfortunately, none of the predecessor companies followed up with what were some glaring drill results. We plan to do that, but our focus has to be current drilling, the engineering work, and most importantly, moving this thing into production by the end of the year. So on that end, or on that note, excuse me, before I do that, I do want to highlight for some of the folks on the call that we are looking at changing the ticker to be more commensurate with our current new name. That is going to take place probably in the next couple of weeks. The platform, the trading doesn't change in any way, but I just want to forewarn you that you will see a change on that ticker appropriately. We've clearly changed the ticker and the name across the board on the Toronto Stock Exchange. The name has been reflected on the OTC, but the ticker has yet to be changed. And that's just a natural timeline lag that I highlighted within one of our press releases. And I will also add that later next week, you will see some drill results. It may trickle the following week. I don't expect that to be the case, but you know, now we're in the midst of getting a wealth of assay results back, and there'll be that ongoing flow. So on that note, Campbell, I'll turn it back to you for questions we might have from some of the folks that have dialed in today or linked up?
Sure. This is a question and a nice comment. Is share consolidation part of the plan before production by the end of the year? Very encouraged with your company execution. Looking forward to drilling results in the near term and updated resource in Q2, setting up nicely for restart of production. Higher gold price. He's adding $300 into the modeling, and capping will increase upside. Thank you. So with that, the share price consolidation.
Yeah, I mean, that's a question I get. You know, as I said, we have a lot of skin in the game, and I have a significant share position. I'm not a big fan of share consolidations. I think if we do it appropriately, you know, that might make some sense. It's not currently contemplated, and that really gets back to why did we do a streaming transaction? You know, if you look at my background, I raised hundreds of millions of dollars. Even when we did the financing in August, without all these recent positive developments, the book was well oversubscribed. We took 5 million of the 20 that was on the book. There's a reason for that. We don't want to issue shares, but we also don't want to look at a share consolidation that works against us. And I kind of rather like the liquidity. I think you'll start to see greater and greater trading volume. We've seen a lot of trading volume on Kerr/Arizona since July. That will continue. So we're shaping up nicely for what is going to be, in my view, a pretty exciting year. So the long and the short, no share consolidation contemplated. I don't personally see there being a need. I think if you look at the mere fact that our market cap is well below what it should be, will demonstrate pretty quickly that as our market cap starts ratcheting up, the share price will move higher, and then there won't even be a purpose or consideration towards any type of share consolidation.
Has there been inflation creep on the CapEx over time, with time? Always happens, so.
You know, it always does, but it depends on where you are within the cycle. But the benefit on this one is that what are your two cost centers that drive most of the capital? And those two are really the plant itself, so we don't see much of an increase there. The only change I would say is that because we're going to whole ore leach, we do think that number is going to change a little bit, you know, but it's not going to have a real adverse impact on the economics. And then underground development and contracting, a lot of those mine contractors are itching for the business because it's a long-term project. We're going to go contract mining to start with, but then eventually go to owners mining. So there's a bit of creep, but that's all been reflected. I mean, bearing in mind, and I've said it in some of the other presentations I've been on, going from a study, a pre-feasibility study, and understanding that that is the basis in which you make decisions. The first order of business when I stepped on was, okay, now let's advance this. You know, a feasibility study or a PFS, depending on what stage it's at, is usually plus or minus 15%. I've always been of the view, I want to narrow that. I don't want to have any surprises. And so that is also a big reason why the streaming group stepped in. We could readily show that the numbers we put forth get us to the $23 to $25 million threshold. And so that's pretty important with more recent estimates. And, you know, we're well on our way on the process side and refurbishment of the plant. Don't expect any unpleasant surprises there with where we're at. Currently, everything that we need to purchase for purposes of the upgrade, if you will, is arguably off the shelf and readily achievable. There might be an opportunity within some of those components. The other side of it is mine contracting, which again, 4,300 meters of underground development. It's really about on a per foot basis, what is it going to cost us and timelines, and also understanding and appreciating that in certain areas on any underground development, you have to have additional ground support. Our ground conditions are pretty darn good. And secondly, water. We don't have a significant flow of water, but we do have water. And so in certain cases that potentially works against you, but there's nothing that will surprise us because again, we've got, you know, a wealth of underground development that we can look at and use as a basis. And, you know, Martin's background, my background is such, you know, when I was at Nevada Copper, we sunk a 2,200 foot production size shaft, 24 foot diameter, $75 million. Trust me. And previous to that, been around it for much of my career. I do get what goes into it. And that's why going from a study to where we're at today is far more important, you know, getting a real handle on what that's going to cost. And so hopefully that answers your question on the creep. It's going to be within a range and we're still comfortable in saying that. And my range is 23 to 25 in that range.
Okay, very good. One more question and I'll just pass it to Stu. Can you discuss your shareholder composition, TSX versus OTC trading? Would you like shareholding to change, improve, and what do you think of your share price?
Well, that's a lot of questions. So if I forget
Yeah,
answering one of them, you just
under
please
one
remind me.
umbrella of,
Let's do the simple one first. Shareholder composition is an interesting thing in that, again, the directors and officers probably closer to 35%. Funds and family offices, we've turned over the share base significantly. If you look at it on the TSX and you take July of 2020 to date, I would opine that we've traded 80 to 90 million shares. And on the OTC, we've traded a significant number of shares as well. That's not such a bad thing. I mean, it's turning over a base that, and I'm not using it as an excuse, but you've got a legacy shareholder base here that we're under the assumption for whatever reason that this would be a production in 2018, 19. That's never come from me. I appreciate that one has to set targets and goals, and some of those shareholders have made the decision that they want to move to other projects and platforms. Now let's talk about share price. Again, been in the space a long time, understand investing in this space very, very well. And I kind of look at what we've seen in the market in the last 6 months post-pandemic, and you look at the valuations on a lot of these companies. Many of them have valuations that are higher than Arizona Gold. They have limited drilling, limited resource ounces. They're pointing to blue sky exploration potential, and they're probably at best 10 years away from production. This has all of the above, but near-term production. So when I do the math, those new companies that have tight share floats aren't the ones that you should invest in, because they're arguably going to have to backfill their value. Some of them are going to have good level of success, like, do not get me wrong, and I welcome that, because I think it's desperately needed in this sector in terms of exploration and the ability to have discoveries. But when you look at this and you go, okay, why did Bonifacio step into this? Well, near-term production, modest capital. I'm not talking about a Pumpkin Hollow. I raised over $300-400 million. They added another $300 million to it to take it into production, and that's on the underground operation. If you factor in the open pit, you're looking at closer to another $1 billion on top of that. So I'm not talking about that quantum of capital. I'm talking about $25 million, most of which we've got in hand. If you add it all up and you go, hey, they've raised $5 million in August, they've raised another 18, albeit in stages, because we don't need it currently, but we get another 6 without a doubt in Feb, and the following 6 in April. Gives me a lot of runway to show folks, including folks on this call, that this is a fantastic buying opportunity. Now, I'm not kidding myself on any of the above. I think it's really about people educating themselves, looking at the numbers and doing the comparison, and then they can make their own determination. I'm very, very comfortable with my share position. Average cost is 13 to 14 cents. When I look at it, I go, I have no downside, I've just got upside, and maybe it's taking me a bit longer, but I'll get there. And the mere fact that you're turning over that share registry ain't such a bad thing, because you're trading sideways. And if you follow the markets, as you trade sideways with that volume, eventually it starts to trickle upwards, and then it starts to move, because it ends up in the hands of folks that really, truly get the value proposition. But again, always based on value. And as we come out with news, last year was challenging. We had a couple of delays. That's the reason to postpone the name change until the end of the year, but also in the back of the project funding. So I'm really excited about what's coming, and I'm not going to make an apology for the share price today, but I think that you'll see it steadily improve. The only thing I cannot control, will not comment on, is if the capital markets do what they do and there's uneasiness. I'm very comfortable that gold trades in this range, and if I start generating 20 to 30 million bucks in yearly cash flow, the value speaks for itself. Market cap is 50 Canadian at best, 40 US, and I'm generating 20 to 30 depending on what gold price US EBITDA on a year-to-year basis. Do the math. And I don't need to be arrogant on that point, but the fact is that after-tax number that I pointed to ties in nicely because of the tax pools I have. I'm not looking at significant haircuts from an after-tax perspective. Hopefully that answered most of the questions, Stuart.
yeah.
Or Campbell.
Kind of important page or two of a presentation. Excellent, Stu.
Yeah, thanks for the presentation, Julio. So I guess some big recent news is the financing package. How did you come across Star Royalties in the first place?
Okay.
And were you running a process?
Well, I mean, that gets back to relationships, and again, you can see by my gray hair that I've been in this space for a long time, and I do understand capital markets work for some notable individuals and companies over the years, and I do know many, if not all, the bankers on the street. And one of the funds that was a big investor in Nevada Copper was headed up by an individual, and he's one of the key principals over at Star Royalties. and two of the individuals, in fact. And so I met them years back. Martin Kostek also knew of them. So I knew more than a few of those folks, and they were starting up a royalty company, and they wanted to bring in place what they thought would be a marquee asset. If you look at what they've done, they've raised money privately. They're going to do a public round here, well received, but you'll see that Copperstone is a key material asset for them. And it really gets back to, again, what I said earlier, production in the near term for any royalty streaming company is critical. So, you know, our success is their success, but knowing the individuals and pointing the fact that very credible in terms of their backgrounds, very knowledgeable mining engineers, geologists, you'd expect them to do the work that was required so that they could put this forth as, again, their more key material asset. And so we looked at, you know, the positives of entering into a transaction with that group, thought it was appropriate, and they were nothing but reasonable in terms of what that structure looks like. So, you know, the cost to us is attractive. It allowed us not to have to issue shares at a ridiculous price and allows us to hit our timeline. So hopefully that covers it off, but if you've got any other questions, go for it.
Perfect. And then, you know, in the press release, you discussed some of the other debt holders that are still involved in the company. So Sprott, Transoceanic Minerals, and Braden Capital Corp. I guess is the plan to pay them out of cash flow from operations, given add up to 8.
And I'm not just saying it lightly, Stu. That's a really good question because I do get asked that. Sprott was because they had a project funding package in place. Theirs is drawn out. The cost of capital would have been more costly to us. We paid them out completely, so we have no debt to Sprott at all. That's done, and the warrants that they had still stay in place, but it's a pretty modest amount. The two primary debt holders get back to our chairman and vice chairman, and they're our biggest shareholders. So hopefully that tells you anyone should take comfort in that. We've extended the maturity date to December 31st, 2023. The intent, of course, is to pay it out of cash flow. But they're very amenable to working with the company on that. It's in their best interest. Again, they own a very significant shareholding, and let's be frank, the win, the return comes from the share position, not from the debt coupon. Debt coupons are 8 to 10%, so increase to 10%. So the idea is to take it out completely prior to maturity. We're comfortable in saying that we can. I will say though, in complete transparency, I do think the share price will rise. As it starts to rise, maybe you'll see me do an equity issue at some point, you know, but not at 14 cents. When I say equity issue, what does Arizona Gold look like at the end of the year or next year? Are we trading at 50 cents or $1? If we're trading at $1, you know, do I issue 10 million shares to take care of the debt? I might do that. I might not do that. You know, it just gives me more flexibility. Again, I'm not trying to be brash on this one, but you know, I've raised a lot of equity. It's not about raising the equity. I know I can do that without a problem. I just don't want to do it at this level. You know, that gets back to my share position.
Understandable. And then, so the initial 6 mil tranche, I read that 2 mil went to Sprott. So the rest, the balance, the 4 mil, is that for long lead items? You're putting the deposits down?
It's started exactly, sir. That's started on the specific work. If you look at it, it's the funding bucket for the drilling was raised in August with that bought deal. The funding that we just received from Star Royalties is specific to advancing the project and doing the detailed engineering and advancing the EPC pricing. So that started. Clearly, the next tranche is going to allow us to accelerate it and, in fact, put in orders for the order items. But there's no real bottleneck in that. You know, of course, we're paying attention to it as it starts. I mean, there's a push on this to get this done appropriately. And I'm not going to say that it's a simple exercise. And anyone that thinks it is hasn't been in mining. It's very achievable, and it really gets back to that key comment that I made more than a few times. That infrastructure, that restart is really going back into a pre-existing build and starting in. So, you know, once we engage the underground mining contractor, we're going to start in on that development. Once we refurbish the mill, and you can see by the timeline, you know, we're doing the engineering work to start in on that, but the actual refurbishment will start in, you know, Q3, Q4, and get us wrapped up by the end of the year, right? It might start a bit earlier, but there's nothing within what we need to do that will cause delay, in our opinion. And if there is, we'll put that out appropriately. We've been, you know, since I've been here, I've been pretty darn good about making sure that, you know, what we say is appropriate disclosure, and that's pretty important to me. Including when I say targeted production, it's targeted production, and you know, it will be based on execution, and we think we can execute and get us there.
Yep. And then some people look at a 10-year mine life as a benchmark. is the current exploration program underground targeting, like how do you feel the mine life?
I understand your question. I'm going to jump right in on that. You look at 10-year as the benchmark for underground mining if it's a brand new operation, because you have to incur, in some cases, if you were to replicate this, how much money would you have to spend?
Yep.
Because it's a restart with modest capital, 6 years gets us there. In fact, 4 years gets us there, right? I'm not looking to pay back $100 million, right? What am I looking at? I'm looking at bringing in 25 million, most of which I've got by way of the stream. So, even a 6-year mine life carries it. So 10 years is typically what you would expect for any underground operation, but the understanding is always, and it's implicit, that you need that 10 years on any underground operation because you need to pay back the capital. So if I had to start over and put in this mill, do all the work that was required to permit, do all the work that's required to do the underground development, yeah, I probably need a 10-year mine life. And that was the other reason I stepped in. That was exactly it. It was like, gosh, this is pretty straightforward, right? You look at it and you go, it isn't really all that complicated. It's more about, okay, how many years of mine life do I really need? Do I already know that I'm 6 out of the gate without the drilling that we're doing currently? And predicated in part by way of the cutoff grade, as well as much improved gold prices. This was done at $1,250 gold, when gold was in that range. We're still going to be conservative in terms of how we calculate it. So I'm pretty comfortable that my mine life is what I projected as well. I think you can easily point to the fact that Star Royalties has ticked that box for us as well. But again, I don't need a 10-year mine life, but I do think we can get there. But I don't want to get there out of the gate prematurely, because there's no prize to drill from surface or even from the base of the pit. Costs you a lot more money, right? The whole idea is to do the underground development and then go down farther in the system and continue to drill by way of that underground development, because then you're not drilling, 500 or 800 foot holes. You're just going through and you're taking advantage of your existing development, putting in drill stations and drilling it accordingly. Plus, more importantly, then you can do the appropriate delineation, development drilling, and tightly defined drilling, so you can actually treat it as M&I and then subsequently factor it into your 2P proven and probable.
Yep. And then just one last question from me. So, you've touched on the infrastructure that's in place already, which is a huge plus. So on the tailings dam, are you going to be using the tailings dam in place? Is it expandable, or do you need to build a new one?
No, I'm going to use the one that's in place, because if you look at it, it was built and it wasn't optimized or used from the predecessor company, because they were only in production for about 9 months.
Yeah.
So we've got enough life there for 2.5, 3 years, and then we'll have to expand upon it, all permitted appropriately. So yeah, and it's not dry stack tailings, it's wet tailings too. Which, frankly, in the American Southwest, if you look at, and I have to get back to it, Pumpkin Hollow, the only reason that got permitted is because we went with dry stack tailings, which seems to be more the norm. So
yeah,
the fact that we can do wet tails on this is pretty significant as well.
Yeah,
gives us a little more flexibility, but also lowers the cost for expansion of the existing tailings site.
Thanks for that, Artie.
Thank you. When we look at the results from past 2 years resource expansion drilling, how will you comment on the potential mining widths, and are they wider than your expectations, and are they wider than the past widths?
The short answer is it came up on another call that we had today. Pretty consistent with what we anticipated, and in fact, we'll have to do two passes to get it. So we're happy with what we see. Of course, that's going to be part of the mine plan optimization that we're moving forward on in terms of mining method. And so we brought on some people to help us with that. But if anything, as you can see by way of the drill table, more than adequate mining this.
Thank you. Campbell?
Sure.
Thank you for the question.
Okay. COVID, how's that working and not working, and what are you doing to just protect everybody? And
well, you know what, that has resulted in some delays. I'm not going to use that as an excuse, but we've had a couple of incidences, and so we have to go through appropriate protocol, and we have policies in place. And so we basically suspend activity at the project. We get everyone tested. Anyone that tests positive obviously stays away from the project for an extended period of time. But we have had a couple of incidences, but we've managed to work around it. The last time it happened was in October, and we arguably lost about 3 or 4 days. So it wasn't staggering, but the testing protocol we have and the policy we have in place is pretty robust, as you'd expect it to be.
How are the copper levels impacting the operating costs?
Well, I mean, it doesn't run that high because it's called Copperstone. I mean, the copper inventory is negligible to say the least, but where it runs higher copper, obviously it's going to consume more cyanide, which will have an impact on the overall cost, right? But that's the purpose of all the MET testing, determine the variability of the deposit, determine what areas we might have some challenges in. There was a discussion way back when that I personally think was premature about byproduct values on the copper. If we find and add to a meaningful copper resource, of course we'll consider it, and then we'll look at potentially modifying our circuit appropriately with a SART system that mitigates the cyanide consumption. But premature to point to it, I thought it was always flawed. You know, I'm coming from a copper background, right? So been in copper for 13 years, so I get that space. So if the copper inventory is negligible, it's not a good thing to even consider. But what you need to do is get a handle on it from a recovery standpoint and what impact it has on your metallurgy.
Sure. Can you tell us a little bit about the new CFO?
Well, you know, as we're advancing,
What's he about? Who's the Dale?
Dale worked for me at Nevada Copper. So on the back of New Afton, which is a mine that New Gold had, still has, I believe. He was on the project build side, more project orientated. He worked with me at Nevada Copper as we oversaw, you know, hundreds of millions of dollars spent on Pumpkin Hollow. But also, as you can look by his resume, we'll put it out in a formal press release, but we did put it on our website. Very strong financial background, you know, CPA, also FCPA, and from the UK. So very rarely do you get accounting people that you have a cleaning person that's crossing behind you.
Yeah, that happens. Yeah.
Just
Well, we keep a clean office.
Sorry. I'm just kidding. I'm sorry. Yeah, very rarely, I will say, that you get an accountant, CPA that understands mines and what goes into it. So a very significant addition. Worked with me for a number of years, so I didn't have to go through a headhunter. I've known Dale for a long time, and just a very, very strong financial person. And from a corporate reporting perspective, you know, we're now at a point where we have to advance our disclosure. It was never up to a level that I'm accustomed to. I've always worked for mid-cap, larger companies, and we were using an outsourced group. They did a credible job, but you know, even in terms of the disclosure in the annual information form, financial statements, you know, there's an ability to improve upon that and streamline it. It is a public document. It should be dealt with appropriately, and I just think that we can make some improvements on it. Bearing in mind that I'm also a CPA, and I started as a CFO in my early years, in my 20s. I'm in my 50s now, so I stopped doing that a long, long time ago, but it's not a skill set that you lose. And so I understand the project side well enough, but I also understand that, you know, having appropriate project controls, internal controls, costing, forecasting, critical path in terms of measuring physical activity versus budget. You know, that's something a lot of junior companies lose sight of, right? They go, hey, we're on budget, but they don't realize that they haven't accomplished what they said they were going to accomplish. So are you truly on budget? The answer is no. So, you know, Dale's skill set is more focused in on overseeing this, but on the corporate financial reporting, he'll do a fantastic job as a CFO. So very, very pleased. A very good addition. And, you know, of course, we'll add people to the mix. Martin Kostiak, you know, you look at his background, you look at his legacy in terms of his family background, from his grandfather who's in the Mining Hall of Fame to his dad, to him, to his son. You know, it runs in the veins, right? And so he's worked at some big operations, and fantastic relative to his understanding, and blessed to have him, frankly, blessed to have him. And I think the company benefits from his skill set in a very significant way. So, you know, the core team, and also on site, Dave Thomas, formerly with Newmont on the civil side, we've got a very strong core team. Of course, we're going to add to that appropriately. You know, on the mine contracting side, that's outsourced, but let's, you know, not to get into too much detail. You start with mine contracting, you convert to owner's mining, because many of the people that you bring on end up wanting to stay at the project. So you hire them on directly, and that lowers your overall cost. You do not do that initially. That's not a smart move. You know, bringing in the personnel, bringing in the skill set, bringing in the equipment, The whole intent with mine contractors to get them to bring their fleet in, which mitigates our costs, but also have an arrangement that allows us to lease it eventually to purchase it, right? So it's been very, very well thought through in my mind. And there's been so much work done in the background that might not be easily reflected within the share price and the valuation. But what it's done is it's mitigated the risks appropriately, which is what you need to do. And so, again, American Bonanza, I think, did a good job getting permitted, advancing it, raising the money, building the infrastructure that you see, doing the underground development, but, execution on the actual mining. And maybe it had to do with the lack of capital at the time. There just wasn't the ability to move it to the stage that it currently is at. And then, to close off the project funding package of that magnitude, which is modest if you look at it relative to the amount of capital being raised, but it's still a significant financing nut towards the overall project capital. And again, it allowed us to get the capital without issuing 300 million shares. So, you do the reverse math on it. Share consolidation, no. Do I think the share count's going to change dramatically? No. Will it change a little bit? It always does. Let's be completely transparent. But when you look at the chairman, vice chairman, myself, who represent a significant holding, and of the three, I'm the small shareholder at 7 million shares. So, as they say, I've got skin in the game. I'm not doing this just for the fun of it. I'm doing it because I think there's a real opportunity here.
Great, thank you. We've reached the top of our hour. I want to thank everyone for tuning in. We'll be asking you for feedback, and please get it to us, and it'll get itself to Julio and almost instantaneously. And you should follow Arizona Gold Corp on Twitter and LinkedIn. Though I think on Twitter you're still as Kerr Mines, but
yeah, we'll be changing that over. Yeah.
But anyway, and of course you can find Invest Capital in both places as well. With that, you've covered everything, Julio, but you always ask why buy now. So if you can give us some immediacy, which you kind of already have, but just to top it off, give us some more.
Yeah, I'm going to go. Why buy now? Because you're not going to ever be able to buy it at this level for an extended period of time, and it's grossly undervalued. And there's serious money that's stepping into it that understands what this should be and how it should be valued, and the fact that we're executing and hitting the mark across the board. So do the comparison, and you'll find there's very few projects that can go into production that have upside on ounces as well as cash flow in the near term in what is a fantastic jurisdiction. And that's simply it. And as I said earlier, it's going to trade sideways like it has, but eventually it's going to start to gap, and then you'll look back and go, geez, it's at 35 cents. I probably should have bought at 14. And the ability to buy at this point, let's be honest, the markets across the board in the last 30 days to 60 days have been kind of soft, as they typically are at the beginning of the year. There's a bit of uncertainty. Gold's up, gold's down. Seniors are down, mid caps are down, a lot of juniors are down, but you've got people collecting here. And if anything, I get phone calls from folks that I know that are significant shareholders that have significant backing, and they're pleased to be able to buy at this price point. If anything, it's an opportunity. So I'll leave it at that. Before I close off, I want to thank everyone at NMS, and Campbell, to Stuart, to Curtis, and I also want to thank all the people that spent their time today to dial in. And so please do feel free to reach across to Campbell or myself directly, and we'll get you any information that you need, or happy to answer any subsequent follow-up questions of any type.
The replay will be probably ready next 30-40 minutes, and do share it, spread the word. Thank you.
Thank you very much. Thanks, guys.
Thank you. See ya.
Bye-bye.